you. हेलो फ्रेंड्स, सबसे पहले तो मैं आप सबको स्वतंत्रता दिवस की शुभकामनाएं, हार्दिक शुभकामनाएं एडवांस में देना चाहता हूं। We are very proud of our country, and as a citizen, proud citizen, I really want to wish you all a very happy Independence Day. To begin with, I'd like to say that it's a great pleasure to have you all on a conference call to discuss our first quarter performance. We started FY24 on a positive note by reporting total income of about 23.34 crores, maintaining our EBITDA margin at almost 10%. We reported EBITDA of 2.30 crores and PAT of 1.01 crores. This is a testament of resilience, strategic investment, and a focus on cost control. I believe you all would have had the opportunity to go through the results published in the exchange. What I'd want to share with you all is the business prospect of Avro India Limited from a future perspective. We saw a reasonably muted Q1 from the standpoint of buoyancy in the market. There was some amount of latency, some amount of, let's say, recklessness, or some amount of, let us say, low output, low uptake. But anyway, we are in the process of debottlenecking a couple of things, and out of which are plastic recycling facility, and also bringing in new molds and SKUs as per customer taste and expectations to cater to ever-evolving consumers across length and width of the country, which means we are going on adding product after product, newer products, so that, we can actually challenge the consumer's mindset and offer them something better than that they have never seen. This approach has allowed us to tap the new market and expand revenues while maintaining robust growth. We're also enthusiastic in enhancing our regional presence and increasing our distribution share. This will eventually increase our presence pan-India in line with our vision to become a leading plastic furniture manufacturer of India. We are already a national brand with greater visibility in channels across India. Currently, we are operating in 18 states across length and breadth of the country, right from Jammu and Kashmir to Kerala and to Gujarat to Assam, and 3 union territories, and expanding our reach beyond these geographies to reach out to prospective buyers and consumers due to our wide range of products which are aesthetically designed, qualitative, and aggressive pricing to reach critical mass and double our existing turnover rapidly over a period of time. In the meantime, the demand for recycled plastic is rapidly increasing due to growing awareness about recycling through ESG to whatever government policies mandating the use of recycled plastic by manufacturers, and the ability to maintain product quality even with reused plastic after recycling. One of our prime investments has been in the backward integration through the establishment of plastic upcycling plant. We call it upcycling from the standpoint of value addition that we do. Of course, it is recycling in a way as a process, but yes, we are actually delivering value. This venture will play a pivotal role in driving profitability by effectively managing costs. The pallets or the granules manufactured from this plant are being utilized in our production processes 100% at this point of time. We do not have material to offer to others, and this will significantly reduce cost over a period of time compared to market-sourced pallets of granules. This focus on cost optimization will be a crucial driver of our success in today and in future times to come. We're actively working on optimizing our working capital cycles to enhance liquidity and operational efficiency. Our focus on capacity utilization remains robust, allowing us to maximize productivity while upholding quality standards. Moreover, we have been actively expanding our presence in both online and offline sales channels to adapt to changing consumer behavior and reach a wider customer base. We are in the investment phase with equal focus on production as well as increasing marketing reach. Lots of new resources in terms of manpower or anything else for that matter are being deployed in front end and back end in terms of social, digital media, etc., so that we can achieve this critical mass and achieve scale and growth. We believe our efforts will start seeing exponential results in FY24 and in ensuing years because all the capital investment that is going in deployment of manpower as well as SKU and recycling put together, we are the only company in the entire country today to become an integrated process manufacturer from post-consumer plastic waste to B2B and B2C, having a complete value chain. This is something which is absolutely phenomenal, and which means over a period of time, depending upon how much we are able to scale up our operations, this will start yielding us the phenomenal results that we have all been waiting for. So I believe the demand outlook is very promising and would earn us the best rewards for our investment in times to come. I believe in the process, and trust has been instrumental in our growth journey, and we remain committed to creating sustainable advantages for our stakeholders and shareholders. Now, let's open the floor for question and discussion. Thank you very much.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Alok Damani from Shree Capital. Please go ahead.
Yes. Good afternoon, sir. Congratulations for the great set of numbers.
Thank you.
Sir, our EBITDA margin is of 10%. Is it sustainable?
Is that the only question you have, Alok, or you have some other question? I will continue.
Yes, some other questions also.
Okay, let me answer this one straight away for the time being. Interestingly, Alok, I believe that in a manufacturing setup, this kind of EBITDA is reasonably low. It's actually low. It should have been better than higher. But what happens is, everything matters in the critical mass scale. And what we are trying to do is, geographically, we are spreading rather. We are spreading across nation, and 1.4 billion people with ever-increasing, rising disposable income, and people below poverty line rising to that level. So when it comes to furniture, plastic furniture per se, we are into a category where we are talking of afforestation. We are supporting afforestation from the standpoint of that these plastic furniture are indoor, outdoor, usable for more than 2 decades. When I say 2 decades, it means 2 decades. All right? And they're so cost effective. And another thing is that 4 to 6 times it can be recycled, and then later, finally, it gets into making of the road. Now, this particular deployment, what is happening is not only the SKU that we have, the range we have, the people that we deployed. Earlier, we did not have people in South India and Western India. Now we have people, including Mumbai and Nagpur, etc., or Kerala, for the Tamil Nadu, Karnataka, etc., Assam, Bengal, wherever. We are having resources now being deployed. And because we have greater acceptability for past 21 years in the product category that we are into, we have leadership. And not only that, from the standpoint of aesthetically designed products, we have more than 25 designs which are registered in register, which are very different and unique, and we are 40% cheaper than the national brand. So there are takers everywhere. So I believe that the moment we reach that critical mass and that scale, Alok, then this EBITDA margin will certainly go up dramatically, which will be very different.
Okay. And sir, could you please bifurcate for online and offline sales for the plastic furniture?
Yeah, I'll put it this way, that in last year we served more than 36,000 orders on Flipkart, Amazon, Meesho, Jio, and FirstCry, and so on and so forth. In fact, we are number 1 on Amazon in terms of the reach of the product ranking, rating both put together, and more than 6,500 zip codes we have served across India out of approximately 19,000 zip codes. So there are takers. So in terms of revenue, I think, I had this a number of 36,000 plus orders that we have served, but revenue breakup I may not have right now, so I would urge you to kindly give me the time. Let me find out in case if I can give you revenue breakup, because I do not want to give you a breakup which I don't have the numbers, so I'll try to give you that.
Okay, sir, no problem. Sir, if any new product introduced in furniture portfolio?
Yes, Alok, I'm so glad you said that. In fact, last week, Thursday, Friday, I was in Mumbai, and we have a manufacturer, a mold from China. They got it set up here in India. So I ordered a couple of new molds. As a company, we believe that today, to let us say, excite customers, we need to give them new product category on the lines, for example, if you see mobile phones, right from these large corporates of Oppos and Vigos and so on and so forth, they keep, sort of giving, or even Apple for that matter. Apple is first in this particular category. They keep enticing customers with a newer range. So does we. We always ensure that, all the obsolete models, which are, let's say, probably low in volume, discard them. We keep getting newer products so that, we are fresh in the industry. And that's probably the reason that today from Ghaziabad or Noida, Delhi, to going up to almost 2,000 kilometers deep down to South Kerala, it's not an easy job to go and sell material there or in Karnataka. But last month we had one of the highest sales in Karnataka amongst the entire list of the entire July started. So which demonstrates that today, because of this category of product that we are bringing and will continue to bring and assure and ensure that, that freshness remains in the market is what is our domain and forte and strength. And we will capitalize on that.
Okay, sir. And sir, as we hear as we hearing lot of recycling, but it's not transferring into our result. So when can we see the scale in the vertical?
Thank you, Alok. You asked a very valid question. This is true that, the capacity that we have today, we are unable to debottleneck that for various reasons. When it comes to establishment of a process which nobody has ever seen in the country, because to process post-consumer plastic waste, let's say we are talking about cement bags, fertilizer bags, wall putty bags, milk pouches, so on and so forth. There's a science behind that, and it entails, certain the process where, right from the washing to the grinding to Avro to so on and so forth, scientific process. And when we build that, there are no standard specifications of the machines, the infrastructure that are required or desired or they are available in the country. In fact, we are at the nascent stage in the country when it comes to let's say recycling or upcycling post-consumer plastic waste, not the industry. Industry anybody can do. All right, we have to just grind it. That's it. But in this case, because this is science, so what is happening is we are building that scale. We have built that scale. In fact, we had a space of about 30,000 square feet. We added another 25,000. So right now we have 55,000 square feet place. We have a production ability of more than 600 tons right now at this point of time. And I'm talking to you. We are able to reach about 250 tons or so. But the moment we reach that critical mass, and we will continue to expand month by month by month. And by this year, and we believe that, because our own consumption itself is about, let's say, 600 tons. So we will consume anyway. And the moment we consume that, our cost of production will be low. Naturally, we'll be able to offer aggressive pricing. So our production output of our finished goods also will increase. And once it increases, the domestic consumption, in-house consumption also will increase. So whatever we are producing will get self-consumed. Naturally, the moment we are able to reach that critical mass, so what is happening? Two advantages. One is the final product that we are able to sell and offer to the across the country for that matter. Two, the in-house capacity that we're building up in terms of recycling and using it in-house and consuming it. So these dual advantages that we will have will certainly make it a very different company altogether. So the process is taking some time, and I believe, we lost Q1. We might probably have challenges Q2 also, but Q3, Q4 onwards, it will start looking very, very forward.
Okay. Sir, would you be required to quantify capex for the same?
Yes, Alok, there are two things. One is that, we set up capex, slowly, progressively, step by step. That's what we're doing at this point of time. But we have also been contemplating that, I had said in the last couple of Concalls that we have had, that we are also probably looking at a bulk deployment of capex, and which will a greenfield infrastructure, which will have a huge mass, which will be a beautiful, different, scalable model and sustainable model. Because let me put in numbers. For example, today, in the pan-India today, more than 60 lakh metric ton, 6 million metric ton of plastic is available, which is post-consumer plastic, out of which 66% is PP, HG, LD, which is the primary source of material, which is the, let's say, the most widely spread and used material for that matter, and we use PP in our company. So now that material is available, but there are no takers, there are no refiners, there are no processors. And we got into that first mover advantage. We are learning the tricks of the trade and business. And as I said, the debottleneck is happening. So over the present, because of the abundant availability of this material, we are in a position to actually scale up. Number one, the material is available. Number two, we can process. We need to scale up. We need infrastructure capex for that. Number three, there's a consumption. Number four, there's an offloading of material also, because the consumption is there in the market. So these things, integrated advantage that we are getting is what we're looking at. So naturally, there are two choices. One, we go organic. Just go step by step, baby step, go on increasing capacity month by month. That is one choice. Second, we continue to do that, but, we also bring in, and that is a large capex, and ensure that, okay, all of a sudden, suddenly we scale up this to the next maybe 5, 6x or 10x also. So we are certainly looking at that option also.
Sir, what is the plan of funding for this capex?
that we need to know from you, Alok. Because, we as a company, whatever small IQ that we did long back, they were very, very small. But in any case, I think the right time is now, wherein the company actually needs to really go big, and it can. And it has the wherewithal, because we are not just geographically located in North India, we are pan-India company today, operating out, as I said, 21 states. It's 18 states and 3 unit territories. And we are ever increasing and rising, and I'm sure we will complete the entire value chain across India. So which means when we are at the front end, we are a product company. When we are establishing a product everywhere, that means there are takers, there are buyers, and it will be repetitive sales. Now, we have to only go inward with, recycling of materials, which is so easy for us to do because we have learned the trick of the trade. Now, only thing that we need to do is expand, which means capital. So when it comes to capital, we are also looking at, various options of instruments that are suitable depending upon what kind of appetite we have, what kind of markup we're looking at, what kind of scale we're looking at, what kind of investment is possible, doable, and if there are takers, investors actually coming forward for that. And the moment we have a right strike, we'll certainly go for it.
Okay. Thank you. Thank you so much, sir.
Thank you, Alok.
Thank you.
Thank you. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Hi, thank you for taking my question, sir. Sir, I have a few questions. Yeah, I hope you're doing good. Just a few questions. First is, sir, if you could give the volumes for the quarter. And the second one is that I just wanted to have some clarity on the post-consumer plastic recycling line that we have. Last quarter, we had the capacity of 300 tons, and right now, as you've mentioned, it is close to 600 tons. So, if I could get some clarity on how is the debottlenecking currently going, how long will it take till it becomes sustainable, and by when do we aim to take it up to 1,000 tons? These are my first two questions.
Right. First question, Miraj, can you repeat? You had asked about some volume. What is that?
Yeah, volumes that we processed this quarter that we've sold.
You're talking about, first question was of something else because I could not hear it properly.
It was about the volumes, sir. Volumes in furniture that we sold this quarter.
You want volume quantity?
Yes, sir.
I'm so sorry, Miraj, I'm not having the quantity in front of me, but I will certainly send that details to you, no problem. Or probably we'll figure it out and give you that. Okay. So,
sure.
But in any case, coming to this particular recycling aspect, which said, no doubt, as per the disclosure that we did in LFDR, we had only mentioned 300 tons. Yes, we did have more than 300 tons, but we did not want to over-leverage and say that what is not possible. So anyway, we are reaching 250, 260, 270, and that kind of stuff, we are anyway reaching. But right now, we are not just sitting quiet. What we're doing, Miraj, is that, we have, as a company, we have taken as a policy that we will go on expanding this particular ability of ours to in-house process capability, because the moment we reach, let's say, if we have 1,000-ton capacity, and we're able to reach 70-80% of the production efficiency, naturally, the moment we have that, we are able to reach 70-80%. But if we don't have, we cannot. So what we're trying to do is we are balancing that act. And when it comes to debottlenecking, it's a very, very small issue. Let's say you have labor challenges, they need to be trained. You may have equipment, instrument systems, etc. Because nothing is very, very standard in the country. And if at all there is something standard coming from China or Europe, it is so expensive, Miraj. Let's say, for example, a washing line from China will cost 8 crore rupees. And when it comes from Europe, it might be anything. It could be beyond our understanding. But we don't spend money like that. We don't splurge. We understand the logic of spending on capital goods, that it has to be logical. So what we do is we ensure that without compromising the quality and the cost, we actually are able to deliver that kind of value. And what we are trying to do is we are building capacity through a certain amount of material management as well as vendor management. And through that, we not only get the efficiency, we also get proprietary stuff. We are keeping it very close to our chest at this point of time. And over a period of time, the moment we keep adding these equipment, it will continue to debottleneck and ensure that we are able to deliver that kind of work. So I think we are slowly, what is happening in Miraj, there are ways. One can always stack up numbers and say, all right, these are numbers. Second way is, yes, when it becomes to building capacity, so there are n number of challenges and issues that happen. But yes, within the years, we are absolutely slowly cruising. And the moment we pick up the traction, then it will be different ballgame altogether.
Okay, got it, sir. And sir, if you could just highlight a bit on the demand scenario, how is it looking for us right now? If you could just do a brief on that.
For furniture, plastic furniture?
Yes, sir. On plastic furniture.
And so in our...
Incidentally, Viraj, there is a 15% organic growth across India on the plastic furniture. Let's say we are about $1 billion industry across India. And there's a 15% organic growth. So we know that there are people who are sitting and waiting and watching. And, probably we need to reach out. So I'll put it this way, that in the existing market, the demand is silent, which means there is neither it's going down nor going up. But in the expanding market, the newer market that we are touching, we are getting very good reception. So we believe that, even if the existing markets keep performing the way they have been, in the moment we touch these newer sources, then we will be able to reach the different mass altogether. So with that process, and I'm sure we should be able to do that. Viraj, you were asking about this quantity. I have this quantity in front of me. This is 649,000 pieces we have sold during the June quarter. I think approximately 6.5 lakh pieces we already sold. I just
got it. Sir, could you clarify that in tonnage, if we can clarify that in tonnage?
Tonnage, Miraj, I'll have to check because, what happens is because there are product ranges from 2 kg to 6 kg, 8 kg and so on and so forth. So right now I may not have tonnage in front of me, but I can certainly share that tonnage also.
Okay, sir.
Sir, this is Abhishek here. So just want to understand in our new states apart from UP, which are the states we are getting very good feedback from the customers and which are the states you are facing challenges at this point of time. And we have entered into Karnataka and some of the states where logistic cost is much higher. So how we are going to be competitive, sir?
Yeah, beautiful. Incidentally, Abhishek, thank you very much for asking this question. Number one, when it comes to new states, we never expected that Karnataka could be a, let's say, multi-bagger for us. Last month, we sold more than 35 lakh rupees metal in that particular state in 1 month alone. And probably one of the highest grossing earners. Now, what is happening interestingly is that new states having a great receptibility because they probably had been waiting for such products to come. Because regional specific players were not able to deliver neither the range nor the quality, nor the pricing for that matter. So we were able to do that. So not only Karnataka, even Bihar, Jharkhand, Assam, and West Bengal, these are new markets that we are touched, are doing excellently well, number one. Number two, when it comes to logistic costs, interestingly, let's say our median logistic cost is about 7% freight, and we offer, prima facie, we offer ex-factory prices. So invariably, the distributor pays for the logistics. But in the case of these people who are sitting far off places, what we've done is we've added in logistic cost. We added 14% to the cost of our product, and still it was viable for them because instead of 7 to 10% that it would have costed them, another 3 to 4% they are paying extra. But interestingly, what happened was that because we have started taking large vessels and volumes, let's say 36, 40 feet containers, etc., so instead of 6-7 lakh rupees metal in the container, now we are able to sell 9 lakh, 10 lakh rupees metal. So the cost of the logistics instead of 14% has come down to 10%, 10 or 11% or so. So our median in terms of the rest of the market still remains 7%, but the external market has come down to about 10 to 12%. So I will put it this way, 3 to 5% difference does not differentiate or does not derail our pricing policy or the costing to the distributor or profitability that he wants to do in the market. That's how we have taken. That's how we are not having this challenge.
Got it, sir. And so final question, if you could give us the brief of raw material cost for the quarter in virgin polymer, in post-consumer and post-industrial.
Raw material costs have been absolutely muted. There's no rise because, we are all connected to hydrocarbons. And if you notice, couple of months, the crude, prices have always been in some range-bound kind of stuff. So when this remains like that, it obviously, Reliance drives the market to a greater extent, or international markets also for that matter. Now, from that standpoint of view, I think, polymer prices of virgin, or for that matter, recycled, remains same. For example, virgin, let's assume that it was in the region of 90 rupees to 100 rupees. It still is in the same region, but of course, last couple of weeks, there has been a slight increase of 4 to 6 rupees on the virgin polymer prices. But this is where beauty lies, Abhishek. The beauty is, let's say Reliance has the tenacity or the guts to change prices overnight. But markets don't change. But interestingly, when it comes to recycling, because it's a post-consumer plastic, so let's say if there is an increase of 1 rupee on the Reliance price, then the post-consumer plastic waste might go up by 10 paisa, 15 paisa or 20 paisa. Even if sometimes it may not go up also because there are no takers. What is happening, interestingly, Abhishek, when it comes to, for example, your milk pouches at your home, your cement bags, sugar, fertilizers, onion, potato, and so on and so forth. There are a lot of things of this kind. There are no takers. So invariably, they want to push that. They want to see, koi le to le. And we are ones, we're taking it. So we don't really face the heat when it comes to raw material cost for that matter. And if there is an increase in the polymer price of virgin, by let's say we consume 30% of that. So it doesn't really hurt us so much. We wait for markets to understand or them to rise. And only then, we probably try to pass on that excess cost to the consumers or the distributor for that matter. Because we have to be conscious of the fact that we are in a competitive market. And because we are able to mitigate and offset through the in-house capacity that we have. So we don't really face that challenge and heat. Aaj hi karna. It is not like that. We can always take that call and pick up and say, all right, when is a good time for us to do that? When it is a buoyancy in the market. Markets are forward-looking. For example, we are connected to mostly festivities. For example, Ganesh Chaturthi and so on and so forth, then Dashara, Diwali, and then marriages season, etc. picks up. So we believe that, we should have a reasonably good time. And right now, we are not actually looking at enhancing, increasing prices here and there. We are in the process of building scale and volume. So what we are trying to do is we are becoming very aggressive in the market in terms of deployment of resources as well as the production ability and offload that entire material across India into various pockets wherever there is acceptability and reception is there. And to ensure that, we reach that critical mass where I said, probably we're looking at doubling the turnover from the furniture standpoint of it. That's our major goal. And the moment we do that, not only that scale will offer the EBITDA, but also the recycling will also add to the benefit of it.
Right, sir. Sir, if you could also help with the prices, if you have that handy, the current prices, and what would the prices for virgin? Yeah, for virgin.
As I said, Abhishek, it fluctuates between 90 rupees to 100 rupees. For example, Reliance at times, the last month or so, they were offering 4-6 rupees kg per extra discount also because they had to offer a lot of material. So I think this ranges between 90 to 100 rupees, and I think it should be about 100 to 104 rupees. Polymer, which is PPH110, that's a grade of which we primarily use. And when it comes to recycling, I told you that there isn't any change in that.
Okay, got it. And sir, what would be the input constituents? So how much would you be using as virgin polymer right now and post-consumer recycled right now as compared to last quarter?
Yeah, what we are able to do is 70% we can use post-consumer or let's say recycled material, 30% virgin. So we continue to buy this 30% virgin in any case. Out of this 70% also, because our in-house capacity is very low, so we are almost buying 40% from outside sources this point. So only 30% we are able to produce ourselves. So the moment we reach this critical mass by debottlenecking, that not only we will self-consume this, and recycle this particular virgin also will increase. Because what is happening is that, this quality material that we are delivering to the market are absolutely thick and span, and they are virgin. They made out 100% virgin product. And they're very good in terms of gloss, color, look. Let's say you have beige and oranges and greens and yellows and so on and so forth. They can't be manufactured from recycled. The recycled material has to be little darkish color. So we are delivering that. So because there's a greater acceptability, because pan-India today, people can splurge, they can spend, and they're looking for quality product and a branded one, of course. So what we're trying to do is we're offering them that excellent quality at a reasonably cheaper price than the national brand. So we are able to succeed there. And when it comes to recycling, of course, we have a potent domain and our strength. So we are capitalizing on both these things.
Got it. And sir, the 40% that we are sourcing from outside, I believe it must be post-industrial, right, or post-consumer?
It's post-industrial because there are no people actually doing from post-consumer at this point in time, Abhishek, because it requires a very different dynamic. There is, of course, as I said, if today a company like us, who's in the industry, and my elder son Sahil Agrawal is fully dedicated to this particular cause, he is focused only on doing this recycling, upcycling, because we believe that there's not only margin scale, benefit, and it is serving the interest of the nation also in terms of the revenues, taxes, and let's say labor, employment, etc. that we generate, and plus of course the cost effectiveness that we have. So we are focusing on that, and I'm sure over a period of time, as and when we are able to do that, this entire 40% that we buy from the market, we'll shun it. We'll make it zero.
Got it. Thanks a lot for answering my question, sir. I'll get back in the queue. I have a few more. Thank you.
Thank you, Abhishek. Thank you, Abhishek.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. Ladies and gentlemen, to ask questions, you may press star and 1. The next question is from the line of Shiom Sharma from PCR Capital. Please go ahead.
Hello. So my question was about recycling. Is everything consumed internally or sold outside?
Sharma ji, right now? हाँ जी, बताइए.
Also, who are our buyers of recycled plastic?
First and foremost, Sharma ji, our in-house capacity is reasonably low at this point of time. So we are self-consuming everything that I said right now. Okay? And the moment we reach that huge mass, because kya ho raha na, let us say we are getting that scale and benefit from this recycling. And the beauty is, I'm National President of Furniture Manufacturers Association. Across India, all the manufacturers consume 5 lakh metric ton of plastic every year. Okay? And right now, we are talking of only 5,000-6,000 metric ton per annum that we have capacity. Can you imagine, it's not even 1% in a way. So I assume that over a period of time, the moment I have more excess material to offer to these people, I can always call them up and say, all right, you're buying from others, take it from me. That's it, simple. So it's very easy for us to sell. It's a commodity. It's like, gold, you sell granules, you sell grains, you sell rice. It's like that. You can sell it anytime, anywhere. No issue at all.
Okay, sir, got it. Also, earlier you were talking about expanding region-wise. Are there any targeted regions the company is looking to increase its presence in?
Sharma ji, incidentally, what happened long back, we thought that we should be a North India-based company. We should not go out of this domain because sometimes it doesn't augur. We are unable to service. But the moment we found takers in West Bengal or in Assam, or let us say for that matter in Karnataka or Tamil Nadu, we were shocked because we never ever thought that we can go this far and still sell the material. And these markets are performing well. So now we have opened up our minds. We are so much open, we are thinking, jahan se maal order aata tha, le lenge koi baat nahi. Because today, I am serving 6,500 zip codes across India, and we are selling 36,000 and odd orders. So if you are able to service to consumers on a B2C model, why not through B2B? Is there a taker? So we only need to reach out. And I'm sure over a period of time, with deep distribution and branding, because we have the complete value chain as a product range, as a new SKUs and this and that. But we need to do this deep distribution and branding. The moment we're able to do this, nobody stops us in increasing and enhancing our ability and capacity from what we're doing right now.
Okay, sir. Also, what is our marketing spending?
See, we have been very low on the marketing spend. We are actually spending only on the resources with salary, plus let's say traveling, conveyance costs, etc. But progressively, we are in the process of actually also doing certain branding and through a brand ambassador also. We have been looking for quite some time that, we want somebody who's affordable, who's sellable, so that we can leverage our production as our brand, our quality, our range, 21 is existence with a brand or brand ambassador and probably take it forward. So I believe that, maybe third, fourth quarter onward, marketing spend might increase a little more. And I believe that, the moment we have scale and volume coming in, obviously that cost will be offset with a certain increase in the volume. So we are trying to balance the act. We do not want to splurge money just because, Sharma ji, let us say we can always spend mercilessly, but we want to be very, very low. We want to be very fragile. We want to be ensuring that, we don't overspend or over-leverage our expenses. We want to be very, very, let's say, conservative about it.
Okay, sir, got it. Also, what branding budget you are planning for the future?
What branding budget?
Yeah.
What is the branding budget? Like which area of branding I want to do? You're saying that ATL or BTL? Because right now we're doing a lot of BTL activities. Okay, which is let us say large company material to the flex and catalogs and this and etc. In shop promotion, we are doing watches, etc. etc.
Okay, I mean ATL, branding and marketing.
Yeah, when it comes to ATL is most of television, hoarding, newspaper, print, and so on and so forth. So we're not spending on ATL right now because ATL requires deep pocket. We want to be very conscious. We want to be very, as I said, we do not want to necessarily hit arrow in all directions blindly. We want to ensure that, wherever we spend, we get the moolah for our money. Okay? So, as and when we have the strength or need and necessity, we will ensure that specifically geographically we will do that. If possible, and if we can do it, we will do nationally.
Okay, sir. Thanks.
Thank you, Sharma ji.
Thank you. Participants who wish to ask questions may press star and 1 on their touchtone telephone. The next question is from the line of Miraj.
Yeah, thank you for taking my question again, sir. This is more on clarity part only. So, just wanted to clarify that you mentioned current post-recycling consumer plastic that we're taking, that we have in a plant, we're able to do 260 to 270 tons, right?
Right.
That is the current. Right. And our current capacity of plastic manufacturing that we have, that is of 8,000 tons. So we have a plan to double that. How are we positioned there? So have we taken any steps or any plans regarding do we want to do it in this year or gradually over next 2 years? Any plans on that part, sir?
Yeah, certainly. Miraj, this will go hand in hand. Let's put it this way, 8,000 metric ton or whatever, 26 lakh pieces, etc. that we sold last year, 25 lakh pieces. You would like to take 25 lakh pieces to 50 lakh pieces over a period of time. So which is not going to happen overnight. I'm sure we will expect, next 3 years or so for us to do so. We are keeping FY26 as a target. We will double the turnover or maybe earlier than that, depending upon how fast we are able to cruise, depending upon the capex that we deploy. So naturally for that, we will require a couple of machines, couple of molds, and they will be just add-on. It's not that, we will require a greenfield project. It's not necessary. Just keep on adding one after the other. It's like, scaling up, increasing the volume. So I think, a couple of about 5 to 10, I'll put it this way, approximately about 10 crore will go into the capex as far as the furniture manufacturing is concerned in terms of adding machines as well as molds, etc. And this 10 crore should certainly give us almost a double volume from what we are doing now. And when it comes to recycling, assume that, from 8,000 we go to 15,000 metric tons in the next couple of years, depending upon how fast we can. So when I'm saying 3 years, it doesn't necessarily mean 3 years. It might mean it can happen maybe in 1.5 years also, depending upon how fast we're able to deliver and move. So today, let's imagine that, from 8,000 we go to 15,000 tons. Right now, we have about 6,000 metric ton capacity in our plant right now, recycling, or maybe 6,000 to 7,000 tons, let's assume, because I had 600 tons, so it comes to 7,200. Okay? But we're not stopping it. What we're doing is, parallelly, we are going on increasing this. We want to take it to 12,000, 15,000 tons or so that over a period of time, 70% that we consume should be available from in-house production itself. And while we are doing that, naturally, approximately, let's say, if we reach 15,000 tons and 10, 12,000 tons, we are able to consume and manufacture in-house, it will be very good. So which means we don't have to go and sell and request anybody for that matter. And rest, whatever 3,000-5,000 tons we have, we can certainly offer to others. But we do not want to stop that at here in Miraj. We are very conscious. I was mentioning about capex. The moment we have access to the capital, then we will ensure that we set up a big plant, greenfield plant, which is apart from the existing running capacity that we will have. This will continue to operate. But we'll set up a big plant because, as I said, I'm repeating this again, that the material availability, raw material availability is so abundant, Miraj. Today, if I were to, let's say in factory, we normally have a challenge. People say, mera maal pehle lo, mera maal pehle le lo. Because they just come without our information. So availability is good, conversion is good, or let's say we have to only process, that's the problem. We have to sort out that. And there's a consumption also. So what's the problem? There's no problem, except that we need to deploy the capital. So to deploy capital, we have sources, that is one is internal accrual, plus certain access to debt, we can certainly leverage that. But otherwise, in case there's a large capital that we can spend and there's certain availability of capital, then you should certainly give us a leverage over. Then overnight, instead of waiting for a couple of years or months, we can maybe next 6 months or so, we can set up a big plant. So we are in the process and we are scouting for it, looking for it. And since all of you are listening to it, I'm absolutely open to this idea, let's say, suggestions or let's say advices, etc. from all of you, how we can scale it up, how we can go. As a company today, I can assure and say one thing, Viraj, that we hold the greatest potential that is possible in an SME segment company like ours. Okay? Because we understand the DNA and genesis of plastic molding, injection, extrusion technology with a complete 360-degree value chain from post-consumer to B2B, B2C, I said earlier, and we understand the geographic as a demography also. And I think I had mentioned sometime back, long back probably, I'd like to repeat today that I lived in Bangalore for about 25 years. So I speak Kannada, Tamil, Telugu, and Malayalam also, a bit of Malayalam. So geographically, since I travel across India, I resonate and connect with the masses and the people. So it's pretty easy and comfortable for me to be crisscrossing between across nations to ensure that we are everywhere. So these are a couple of small advantages that, Viraj, we have. It is just that, kya hota hai na, we need to just scale it up. And to scale up, we can go gung-ho. All right, overnight, we scale up to the next level. That is one choice. Second is go organically, step by step, baby steps. Right now, we're doing baby steps. But we are certainly looking for an opportunity to scale up to the next level.
Got it, sir. Got it. That's very clear. And sir, just one final part. Currently what we are doing, 260 tons per month, which we have the capacity to take to 600 right now through debottlenecking. By when will we be able to do that? Any timeline on that? Will it be a couple of quarters from now, or how will we be able to do that?
I wish, Viraj, I could have used AI to deliver that result. But, in a manufacturing process, interestingly, Viraj, because there are no standard specific manufacturers across country for post-consumer plastic use. So we have to teach people, a machine ko aise banao, isko aise karo. And half the time I'm so sorry to say that our homegrown entrepreneurs, especially in the SME segment, are deprived short of technology, commitment and understanding and in-depth understanding of the engineering for that matter. This is a challenge we face. Had we got the ecosystem, let's say, for example, in China has got a developed ecosystem today, and I could have certainly said, all right, I need this, X, Y, Z, come on, get these things, put it in my shop, and let me start operating. So today, from 30,000 square foot, I added another 25,000, 55,000 square foot facility I'm operating. Oh, why? Not for 250 tons, but 22,000 tons. So today, I want these people to understand and deliver those equipments and other things to me. As I said, I can always buy Chinese stuff and do. All right, I bought Chinese. For what cost? What cost? Why should I pay for vessels? I understand this technology. We know how it can be done. So why should we understand splurge money? What can be taken from China? We will do it for 25% cost here. What can be taken from Europe? We'll do it in 5-10% cost this year. So we're in the process of that. Of course, as I said, there are hiccups also. Because we're relying on these people and it's taking time to teach them, to brainstorm them or to probably take them on board. It's okay, it's a process, but we'll certainly be able to do it, I'm sure. As you said, how fast. I wish I could do it today, like a genie. I could have said, Aladdin, aaj hi kar do yaar. So I'm waiting for it.
Oh, okay. No worries. Thanks a lot for this detailed answers again, sir. And all the best for the future.
Thank you, Viraj. Thank you very much.
Thank you. A reminder to participants that you may press star and 1 to ask questions. Well, that was the last question in queue. I would now like to hand the conference back to Ms. Kajal Gowda from Advisors.
Yeah. Before that, Rio, I'd like to thank Alok, Viraj, Abhishek, Sharmaji, everybody, and all those who have not asked questions. I can assure you one thing, friends. As a company, this company, I'm only a trustee. And me and my family, my 2 young children, plus the team of people, we're all dedicated to ensure that over a period of time, we become a sustainable, scalable institution. It stays forever. And because I believe in the story of Pan-India, the GDP growth, the economic condition, the buoyancy, the kind of, let us say, the rapid improvement that are likely to happen from $3 trillion, we're looking at becoming $33 trillion by 2050, 2047. That's the vision of Honorable PM, sir. And I'm sure, I can assure all of you, that as a company, we are in the forefront. We are the leaders. But we only need to take this to the next level. And all this will come through advices, suggestions, guidance, support. It could be morally, financially, emotionally. And I'm absolutely open to any idea from all of you for that matter, not only offline, online, including personally, physically. Feel free to come to the factory. This is your factory. You know, whatever questions you have today, once you visit and feel the entire presence yourself, it will give you extraordinary excitement. And that will percolate into your confidence in turning this company to the next level. So we are waiting for it. And thanks a lot to all of you for joining today. Thank you very much.
Thank you, sir. Thank you, everyone, for joining the conference of Avro India Limited. If you have any queries, you can write us to at research@kirinadvisors.com. Once again, thank you, everyone. Thank you, sir.
Thank you, Kajol. Thank you, Rio. Thank you very much. Have a nice day, all of you. And very, very happy Independence स्वतंत्रता दिवस की बहुत-बहुत हार्दिक शुभकामनाएं मेरे देशवासियों को. बहुत-बहुत धन्यवाद. Thank you.
Thank you.